Hey everyone, welcome back to your weekly market outlook. This is for the 21st of October 2024. Let's get it started with last week's numbers here. Obviously, we do want to talk about the UK unemployment rate here. This one here is actually lower than what the market is expected. We actually saw an unemployment rate in the UK fall from 4.1% to 4%. So I think this is good news for the UK economy. And obviously, we take a look at the retail sales number there. It was down from 1% to 0.3%. But it's still positively higher than the expected negative 0.4% in terms of the retail sales number. So overall, I think we're looking at pretty much the stable numbers that are coming out from the UK. The unemployment rate also, it's very important to take a look at. It fell from 2.2% to 1.7%. Core CPI also fell from in the UK, but generally, if we take a look at this one here, the thoughts in the market is obviously whether or not the Bank of England should be cutting interest rates a little bit more aggressively. But again, if we take a look at all the other numbers there, I think it's a little bit more on the balance side of things. We do see the sterling there generally weaker at the beginning of the week following that CPI numbers there, but it kind of recovered at the end of the week there. So overall, I think we're looking at a stronger UK economy here. I think this is pretty much a stable economy at this point in time. And obviously, that's going to prop the sterling from collapsing any further. Other than that, we have the Canadian inflation number here. I think the main focus is definitely the monthly growth here. We were previously at negative 0.2%. We actually shrunk a lot more, negative 0.4% here in terms of the CPI growth. That's below the market consensus of negative 0.2%. New Zealand inflation number, if we take a look at the quarterly numbers here, again, it's lower than what market consensus is here. So again, I think if we take a look at the current scenario that we have from last week in terms of the Canadian, the UK as well as New Zealand, I think we're anticipating the Bank of England to be cutting rates, but might not need to be that aggressive. In terms of Canada and New Zealand, I think these two is probably going to be a little bit more aggressive in terms of their rate cut there. Now, Australian numbers overall generally still good as well, and I think this is playing into what the RBA was saying in terms that wages are still high, the labor market is still tight. We can see the fall in unemployment rate also in the Australian dollar here. Again, Australian dollar and the sterling, I think if we take a look at the two economy between the UK and Australia, I think these two, it's pretty much a stable currency at this point in time. All right, the Eurozone, obviously the expected cut there from 3.65% there. We saw that 25 basis points cut coming up from the Eurozone. Comments coming up from Lagarde, though, that we were focusing on the press conference there. Not really that dovish, but in terms of the statement that it provide, generally it is a dovish statement at this point in time, but still refusing to kind of lay out what they're going to be cutting rates in terms of the next 6 months or so. Still going to be data dependent and whatnot. So I think it is a little bit of a mixed messaging coming out from Lagarde during press conference. She sounded positive, she sounded hawkish, but the statement that they publish, the monetary report themselves, we take a look at that, and it's generally a dovish statement coming out from the ECB. So I think that should put some pressure on the euro in the near future as well. Now, US retail sales number, this is actually a huge jump up, especially if we take a look at the core retail sales. But let's talk about the retail sales first. Market was expecting a gain to 0.3%. We go 0.4%. That's not a big deal. But the core retail sales, I think this is a huge deal. 0.2%, that was revised up. Expectation was for it to be flat at 0.1%. We actually saw an increase to 0.5%. So data after data coming up from the US economy. We have seen the US economy being a really strong economy. I don't think there's going to be any talk about recession for the US at this point in time. And leading up to the election, obviously that's going to be on the 5th of November. All this data, it kind of puts the US dollar in the front foot there in terms of the dollar strength at this point in time. Obviously, as the election draws near, whether or not Trump is actually going to be ahead of the polling there, from Harris there, obviously that's going to benefit the US dollar as well. So I think, going into the election, we only have about 1.5 weeks to go at this point in time. So I think the USR or the financial market itself could actually be stabilizing itself. Might actually see a little bit of dollar strength left here, but whether or not it's actually sustainable or whether or not we're actually going to see a huge volatility right before the week before the election. At this point in time, probably not that sure at this point in time. I think we are probably going to be looking at a little bit more of a controlled range bound market condition in the market there. All right, this week, what are we expecting for this week? Obviously, the big thing is the Bank of Canada. Expectation for the market here is for a 50 basis points cut. Are we going to get it from Canada at this point in time? We could get it. I think, as I said, with the Bank of Canada and the RBNZ, I think they're both in the same position here. I think market is trying to price in for a 50 basis points cut. That inflation has been falling off rapidly and they need to kind of play catch up there. But other than that, for next week we actually don't have a lot of data here. I think we want to focus on we only have the manufacturing numbers coming out from the UK, the Eurozone, as well as the US. That's going to be on Thursday. These are going to be the flash PMI numbers, and if we take a look overall with the flash PMI numbers, main focus is definitely going to be the UK PMI numbers. I think this is overall still good, 51.5. I think we're looking at a little bit of a stable PMI numbers here from the UK. For the US, we might see a little bit of an improvement in terms of manufacturing, just a slight improvement. But overall, I think the services PMI is still way high, 55. We're still very far away from the 50 mark there. But that's it for next week. I don't think we have a lot to talk about on fundamental front. So I think the market is probably going to be looking at that volatility, or trying to price in the election there, or I think technical is probably going to play a huge role, but we're expecting a little bit more of a muted market condition there, a little bit more of a range bound market. Okay, so let's take a look at the Aussie USD. This one here has fallen below 67 cents, but not below 66.50. We still find support at the Ichimoku cloud. Definitely want to keep an eye out on 66.50, especially on the Monday and Tuesday price movement there. Whether or not 66.50 is still going to be a support for the Aussie there. But yeah, should price manage to climb back up above 67 cents on Monday, then we are likely going to track that move higher towards 68 cents. But again, we're looking at this as, and there is a potential for the Aussie USD to actually start forming a head and shoulder pattern with the right shoulder pretty much at 68 cents. The neckline that we can see here, it's going to be at around 66.50. So those are going to be the key levels to watch out for on the Aussie USD. All right, so for the Euro USD, we have come down below 1.0850 there last week, but in terms of the weekly close, it is actually still above 1.0850. The weekly end closed below 1.0850, so I think we're still going to be looking at 1.0850 as kind of the contested support here for the Euro USD. Obviously, the pressure here on the Euro is really strong to the downside, but in terms of the key levels, 1.08 still holds. Now, I don't expect the Euro USD to kind of bounce up, and then go back all the way up to 1.11 or 1.12. But I think there's still room for a little bit of a technical correction happening here, as long as it maintains that range between 1.0850 1.09. And obviously the key driver for next week is whether or not it's actually able to reclaim 1.09. Should it be able to push back up above 1.09, then I think we're going to be looking at a retracement to 1.10, and that would be the anticipated level where a lot of sellers are probably going to look at that and say, you know what, the technical correction is done and we can start shorting the euro. But other than that, I don't think we're going to be getting a lot more sellers in the market here until we move back up to 1.10 or the 1.08 level breaks. Now, if there's a clean break below 1.08 here, now obviously the next stop is going to be a 1.07 and 1.06 on the Euro USD. But again, if we take a look at the current positioning here, it's really hard to say that we have actually broken below 1.0850, because if we take a look at it on a weekly chart, I know this is displaying a daily chart, but if you guys take a look at a weekly chart, price actually bounces off the Ichimoku cloud and it bounces off 1.0850 very cleanly as well. So again, this is something that we need to monitor here for this week, whether or not it's actually going to be able to close below 1.08, or is it going to close back up above 1.09. Should it close back up above 1.09, then I would be looking for a little bit more pullback towards 1.10, a little bit of a technical correction here on the Euro USD. All right. Next up is the pound USD, and the pound USD, as I say, this is a stable currency here. Price is bouncing off 1.30. We saw a little bit of a dip lower below 1.30, but as we mentioned last week, if there's a dip below 1.30, it's not going to have enough momentum to drive price lower, and that's basically the same. That's basically what we get from last week on the pound USD. You can see the bounce off 1.3 here. Obviously, this is not in a clear yet because we need price to be able to move back up above 1.31 before we can say, all right, that's a strong bounce from 1.30. That's going to be, the key support level for the pound USD. But yeah, as I said, if we don't have a close above 1.31 at this point in time, then we don't expect a technical correction, any continuation to the upside to continue for the pound USD. And as per mentioned last week as well, if there's a bounce off the current support level, it's likely going to be limited as well at 1.3250, 1.33 in terms of resistance. So we're not looking at this and say, oh yeah, this is going to rally up all the way up to 1.35 or anything like that. Or we still look at this and say, hey, if it closes above 1.31, then there's still going to be something that we need to monitor, which is 1.3250 and 1.33. Price could actually fail there, and then if it fails there, it will actually be the exact same pattern as we are anticipating with the Aussie USD as well. We might actually be looking at a head and shoulder formation happening on the pound USD. Now, obviously, we take a look at the momentum here. This is starting to look like it's severely oversold at this point in time, but we don't have that confirmation. Stochastic is not above 20 at this point in time yet. So, price could go down even lower should it break below 1.3, and should it break below 1.3 in terms of where the next where the next support is going to be, it's going to be progressively at 1.29, 1.2850 before reaching 1.28 on the pound USD. All right, and lastly we have the dollar Japanese yen. With the dollar Japanese yen, as we feared, there's going to be a little bit of a confusion here by a lot of traders there. Initially people thought that, hey, you know what, dollar yen traded above 150. I think there was a little bit of a stop being run there. We don't actually have a sustained positioning above 150. In fact, what we saw with the 150 range is that price kind of spiked out above 150 and then immediately came back down. Now, again, the positioning for this one here, if we want to be bullish on the dollar Japanese, it actually needs to be above 151, and it should be able to maintain the position above 151. It's not able to do so at this point in time. However, we don't have any confirmation for a technical correction happening as well, i.e. at this point in time, even though it kind of fails at 150, we don't have enough selling momentum here. I think a lot of traders are actually going to be afraid shorting the dollar yen, considering the spike that happened here. And if you take a look at the movement here for the past month, that it continued to grind higher from once it kind of exceeds 148. But overall, this is still within the Ichimoku cloud. Price could very well still fail at a current price level. So for this week, a lot of traders are going to be monitoring two levels. That's going to be 149 and 151. Any break above 151, I think that's when we will see a lot more buyers come into the market and lift the dollar Japanese yen up. However, close below 149, then we actually anticipate a little bit of a pullback to happen on the dollar Japanese yen, which is around 148 to 147.50, with support coming in at 146, 145 range. So this is overall still within the Ichimoku cloud. In fact, this is a very thick Ichimoku cloud, going all the way from 151 to 143. That's about 7 yen worth or 700 pips worth of movement here inside the Ichimoku cloud. And I think for this week, we're still going to be looking at that possible scenario there, unless price is able to break above 151. But there were already talks coming up from the Ministry of Finance in Japan that they are monitoring what's going on with the yen strength, and the language that they use. It is kind of a verbal warning of intervention all over again. Now, a couple of key dates to watch out for as well if you're trading the Japanese yen. 27th of October is going to be a general election for the Japanese government there in Japan. And then on the 31st of October, we have the Bank of Japan interest rate decision as well. So, whether or not there could be a surprise hike coming up from Bank of Japan, this month, or are they going to push it back to December? I think the market is still kind of trying to guess what the Bank of Japan is actually going to do and whether or not there's actually going to be an intervention from the Ministry of Finance. So just be mindful if you're trading the Japanese yen. There's going to be a lot more volatility to happen, and again, I think Japanese yen is still going to be one of the more volatile currencies, so be careful if you're trading the yen crosses. All right, so with that, good luck with your trades, and I'll see you soon.